NNN Stock is one of the more interesting REITs as of lately. On the 1-year chart we see that they are trading pretty much sideways, but there was this big 20% drop in stock price late 2024, which begs the question what happened to the company. Lucky for us, NNN reported earnings not too long ago, so let's see where the company is heading. On the 11th of February, NNN reported earnings where they beat on EPS and revenue. So we're off to a great start here. And taking a look at the earnings highlights, we see a few interesting things. Right off the bat, NNN is a great dividend payer with a yield of 5.6%, but also 35 years of dividend increases and payout ratio sitting below the 75% average for REITs. Occupancy rate was reported at 98%, which is also looking really good. In total, NNN has 3,568 properties and 385 tenants. Texas is by far the biggest state, with 575 properties. Convenience stores is the biggest line of trade, with 17%, which is pretty high in my opinion. I prefer a maximum of 10% here. It's the same with the automotive. Looking at the individual tenants, we see that 7-Eleven is the biggest with only 4.5%. And to me this looks really good. Again, I prefer a maximum of 10% here. Another interesting graph is the lease expirations. We see that 53% expires after 2033. But what does concern me is that the WALT is at only 9.9 years. I would prefer this number to be a little higher. It's the same with the tenants renew rate, which is sitting at 83%. Looking at the financials, we see that revenue has gone up a tiny bit year over year, but nothing too crazy. It's the same with the net earnings, but net earnings per share decreased. Looking at the FFO and AFFO, we see the same thing happening. In general, the numbers go up, but on a per share basis the number decreases or stays flat more or less. Something to keep our eye on. This is also because REITs issue new shares to raise capital. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. NNN is a 7.6 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting at almost 12.4, indicating they might be undervalued. Later in this video I will show you my 3 price targets for NNN stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 869 million. And in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent, besides the lockdown periods of course. We see that margins are going up over a longer period of time, which is looking really good to me. Especially the net margin is also looking really good. EPS is showing similar trends as the margin and the revenue. For a REIT it looks pretty good. Analysts have mixed feelings about the EPS growth. It doesn't look too exciting to me to be honest, and is expected to see a small decrease in 2025, and then some recovery in 2026. For the revenue it is looking also very interesting, with mid-single digit growth expectations for the upcoming 3 years. Return on assets is sitting at 4.5%, which is a decent number for a REIT. Return on equity is looking pretty decent, and the most important number, return on invested capital, is sitting at 4.1%, which is a low number, even for a REIT. But it is higher than the 5-year average, so that's the positive part here. Current ratio is at 1.55, which is a decent number for a REIT. Historically, it went up and down quite a lot, but recently it is looking pretty steady. And right now NNN has 4.37 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. NNN has 9 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is kinda going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. This is also the reason why we see this number on a per share basis decreasing at the beginning of this video. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 5.7%, which is a great number. Annual payout is at $2.32 and payout ratio is around 70%, which is below the 75% average for REITs. The 5-year growth rate is at 2.5%, which is a low number, but they increased the dividend for 34 years in a row now, which is really impressive, especially in this industry. In here we see the dividends paid since 2015, and to me this looks really good. NNN really likes to increase the dividends at a low rate, but over a longer period of time this really adds up. In this graph we see the expected dividends in 2025, 2026 and 2027. Of course, the distant estimation can be highly impacted by results, but it gives you a rough indication. It is expected to grow at the historical rate from here. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare NNN stock with the overall market. In this case, the S&P 500. Next to that I added ADC and realty income. And on the 5-year chart we see that NNN returned -9%, and this is including dividends. The S&P 500 did return 96%, massively outperforming all stocks in this list. Only ADC managed to get a positive return here, but only at 11%. On the 1-year chart it looks pretty interesting, with the S&P 500 again beating most stocks in this list. Both NNN and realty income were massively outperformed, but ADC managed to beat the S&P 500 here. On the 6-month chart it is pretty much the same story all over again. ADC is doing a decent job with 1%, while the other REITs are lagging behind big time. Meanwhile, the S&P 500 is crushing again with a 10% return. On the 1-month chart it is a bit chaotic, with stocks going up and down a lot. Down the line, the NNN and realty income are the winners here by a slim margin. So bottom line, the S&P 500 was by far the better investment in the past 5 years. But could this be the perfect time to buy NNN stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth I'm filling in 3, 4 and 5%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 44, 46 and 48%. For the free cash flow margin I'm putting in 71, 73 and 75%. For the PE ratio I'm putting in 20 since it is a REIT. And for the price of free cash flow I'm putting in 10, 12 and 14. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. And right now NNN stock is around $41. I hit analyze and we see only one green number. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $33. We have a mid price target of roughly $40 and we have a high price target of $47. To me, the mid price target is the most justified here, indicating that this stock is trading around their fair valuation. And please let me know the price target that you think is the most justified in the comments down below. My final conclusion on NNN stock is that it was having some momentum lately, but they lost some of that great performance in the recent earnings. Revenue is slowing down a little bit recently, and margins are stabilizing instead of growing. But this is just a really steady and consistent REIT, and the 34 years of dividend increases back that up, which is not very common within this industry, of course. Most fundamentals look really good to me. The company is able to grow at a consistent pace historically, so maybe this recent event is just one thing. As said a second ago, the dividends are also looking really good to me, with a healthy payout ratio and a really long track record. From a valuation point of view, I'm a bit more conservative this time. In my previous video I was really excited about where things were going with this company, but after the recent earnings I'm actually a little bit disappointed. So for now I'm waiting a little longer before I pull the trigger. It feels like they first need to show some better results before I buy. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.